Good afternoon, everybody. It's Pablo Zuanic, equity analyst at Zuanic and Associates. I have the pleasure of hosting today the CEO of Aurora Cannabis, Miguel Martin. Miguel, welcome.
Well, thank you, Pablo, and I want to say hello to everyone. It's really great to be here. And before addressing your questions, I'd love to start with a brief overview of Aurora's strategy and recent performance, which has driven our revenue growth, record margins, and sustained profitability. And those results, have been underpinned, by a point of differentiation, positive free cash flow, a strong balance sheet, and zero cannabis debt.
Right. No, thank you for that. And look, I mean, based on the data, right, it would seem that obviously you're one of the largest medical cannabis companies out there in terms of sales, and probably number one if we look at just markets where cannabis is federally legal in medical terms.
Yeah, that's true. We're Canada's largest exporter. We operate, in most of the, significant markets around the world, particularly Australia, Poland, Germany, and the UK, and obviously, are the number one medical cannabis company in Canada.
Right. So look, we want to focus mostly on the medical side of things at a global level. But for investors that are doing their homework, trying to learn about the cannabis companies out there, how would you position Aurora versus other Canadian LPs and even versus just the cannabis space in general?
Well, it's a great question. Unlike other industries, most of the cannabis companies, if not all of them, are different in where they operate, different in what they focus on, and different in their financial profile. As Canada's largest exporter of high-quality medical cannabis with world-class GMP facilities both in Canada and Germany, we believe we are different. We have the flexibility and the ability to supply these markets. That's been called into question in some of these markets, but the Canadian GMP shipments we have, has held up. We've demonstrated over a long period of time, almost a decade in Canada, our continued commitment to global medical cannabis, which is the highest margin part and the fastest growing segment of the overall, Canadian space. And utilizing that world-class production and genetics in a consistent and sort of successful way around the world is different in terms of the way we focused. As I mentioned, we're, one of the top companies in all of the key international markets, that being Australia, Poland, Germany, and the UK, and have the capability to quickly enter, emerging markets, whether that's the new news in Spain, France, or even Italy.
Right. So look, let's just go deeper there in terms of, let's start with the supply chain side of things. If you can remind us about your production capabilities, the location of those places, those facilities, are they EU-GMP, all of them certified? If you can bring in the subject of genetics, just let's start with that.
Sure. It's a great question. Supply chain and the production of these medicinal products, and it is medicine, it's a key component. The regulatory requirements in these markets are quite stringent. So consistent GMP supply, as you mentioned, is critical. We're one of the few select Canadian LPs to have both European in Germany and Australian GMP certified manufacturing and distribution facilities. So the vast majority of our production is EU-GMP. And, in addition to that, we also have two other cultivation facilities really servicing Canada. And as you mentioned, are one of the leaders in science and genetics. And genetics plays such a critical role in the development of these medicines in it. It's not only, the unique characteristics and the consistency of it, but it's also significant increases that we've had in yield and key attributes. And so when you look at that piece of it, you then move into distribution. We're able to distribute our products in a compliant and effective way all around the world. And we've been doing that for a long time. There's a lot that goes into that, particularly in markets that have higher regulatory bars, such as Poland. And those products and the sort of flexibility that large EU-GMP system, makes a difference. We continue to invest. Obviously, we have over $180 million of cash on the balance sheet with no debt. And so we do get questions about investment. We've made significant investments into our facilities, whether that's in Canada or our newest facility, which is in Leuna, Germany. And as we've seen with some of these markets, particularly in Germany, that the bar continues to go up in terms of the certification of these facilities. And we've just recently received our latest certification, GMP, for that, and we're very proud of it.
Can you expand on that? I think there was a press release. I don't know if you can talk about by how much are you expanding capacity in Germany? You're only one of three that have a production there. And remind us why the economics work in Germany with indoor facilities, compared to other places.
Yeah, it's a great question. We'll be doubling our production at that Leuna facility, which is the location of it. And while there are significant, cost advantages to operating in Canada, whether it's the cost of power, the high quality, of the labor, or the length of time that we've had those fixed assets, it makes sense to invest in Germany. And given the margins, and I know there's some interest in our margins, which we guide to about 60%, you can absorb a little bit of some higher fixed costs in Germany and still be very successful. We also think it's a critical component to our engagement with key regulators, thought leaders, and stakeholders to be able to have an EU-GMP facility in Central Europe where people can see the exact genetics and the exact form of production that we have in Canada, featuring, again, those world-class genetics that we develop out in British Columbia.
And can you remind us in terms of what you sell, in the export markets, is it all your own product or do you also, outsource? And the reason I ask that, in some markets like Germany, there's importers that carry, a wide assortment of products. Maybe they buy from 30 different suppliers. And I always wonder whether that puts a company like yourself, at a disadvantage because they can offer more variety. But just confirm if you outsource any of your production and whether I'm wrong about assuming that maybe there's a disadvantage there.
Well, so the answer to your first question is the vast majority of what we sell into Europe is our own production. There is some third-party sales of GMP product that goes into some of those markets, but we believe it's a significant advantage to be vertically integrated. First, you control the consistency. Again, this is medicine. Being out of stock or having to substitute different cultivars because you're sourcing from a variety of other places is not optimal for a prescribing physician or a patient. And so we think it's a key advantage for us. Secondly, there's a cost advantage. And when you grow your own products and you be able to, run it through your own distribution channel rather than buying them, you get a margin benefit overall. But the first point's the more important one. You want to have quality, you want to have consistency, and you want to have independence for these products to be able to have, practitioners and patients feel confident choosing it on an ongoing basis.
Right. And stay with supply chain. Do you use GMP processors in Portugal?
We do not. We do not. That is not part of our distribution network.
All right. And although we'll go deeper into each of the key markets, would you consider buying capacity in low-cost producing countries like Thailand and Colombia? And if not today, when will be the right time, if ever?
Well, I mean, first and foremost, whether it's Thailand or Colombia, it is still some of the most cost-effective flower being grown in Canada. And so while, we are, supportive of cannabis cultivation around the world, right now, we think our own cultivation is the best advantage. Now, never say never. We would always, take a look if something made sense. Right. First and foremost, it would have to be compliant and meet all of our internal and external regulatory standards. But, to chase, a dime or 20 cents in some of those markets right now compared to the high quality, low cost flower that's coming out of Canada just doesn't make sense.
And not to push back, but maybe if you can expand a little bit there. I mean, obviously, when I think of Thailand, South Africa, Colombia, I'm thinking of lower labor costs, probably lower energy cost. How can Canada be more competitive?
Well, so it's a couple of reasons. First, let me say that, it's lower cost doesn't always mean low quality. So some of the products coming out of those markets, are decent. But, you have to register these products. You have to have dossiers on these products. You have to have confidence in the QA process. And when you can have, cultivars for longer periods of time, you can build a lot of equity. And so it's the combination of very compelling cultivation costs, control of the entire distribution network, and confidence that you can navigate the regulatory environment that makes, at least for us, our own cultivation to be really compelling.
Right. And just, for those of you listening out there, I mean, the data pretty much reaffirms what Miguel is saying here, right? You look at Australia, it's a market where Canada remains a dominant supplier, with more of 80% of the business there, despite, countries like Colombia or Thailand trying to make inroads there. And I think that speaks to not only the quality, but also the cost advantage when you put everything together. and the consistency of supply that the Canadian producers have. Before we go on, just a reminder to the audience, we don't take questions live. You can put questions on the chat room in Zoom. You can email them to me, or you can put them on the bubble, and we'll try to address them. Miguel, just moving on now to what I call the export economics and RTM. And I don't know if you've said this before, so I don't want to put words in your mouth. Is it fair to assume that margins for Aurora are about double in the international markets versus the domestic Canadian medical business?
We don't, draw that distinction between international and domestic. What I would say is that, what we've put out there is that we've set a target of a 60% adjusted gross margin for this business channel. Over the last 6 quarters, we've exceeded that target, delivering a record 70% 2 quarters ago. So again, overall, the fastest growing and most profitable portion of the global cannabis market is medical cannabis. And we're a leader, in many markets because of that. And you see it in our overall gross margins as a company.
Right. And before we delve in more detail into each country, just to set the stage, can you say in which overseas markets you rely on importers or distributors and in which you control your route to market? And I know it's not so black and white, but I think people sometimes, I remind people that companies like yourselves and maybe a couple of others do control the RTM and capture a distributor margin that others are not able to because you're just exporting from Canada. But if you can just give more color in terms of where are you, what I would call vertically integrated almost in terms of RTM.
Yeah, I mean, so from a route to market standpoint, each country is different, and it's important to identify the right fit for each market, as not only the commercial landscape is different, but also the regulatory landscape is complex and varies by country by country. So in Europe and Australia, we've been in those markets for almost a decade. And so that gives us a key advantage to be able to look at each of those markets where we're going to, be the wholesaler or deliver directly to a pharmacy, or where we're going to use a third party. So it's different by market. I think, what we focus on is where we don't do it, having the right partners that align from a regulatory standpoint. And in the cases in which we use someone, they usually, have a long pharmaceutical history, or strong providers. And at the end of the day, the most important thing for us is the most efficient pathway to allow our patients to have the greatest access to these industry-leading products.
Right. Thank you. So look, now let's just, before we go into international markets, just on the Canadian domestic and medical market, obviously you're number one, I believe more than 25% market share. Whatever thoughts you can share on that market, from the data we look at, cash payers continue to decline with only increased veteran reimbursements offsetting the decline. Is this true? How long can this dynamic persist? What are the catalysts for growth, or is this just a steady as you go market in terms of domestic medical?
Yeah, so as you mentioned, we're number one in this market. In the Canadian medical market, it's critical to us, not only domestically, but strategically being able to leverage those insights around the world. You mentioned the veterans, and we honor their service and feel a great obligation to those veterans in Canada, and we're the largest provider of medicinal cannabis to veterans. We also see great interest in veterans around the world looking at that, and there's obviously a lot of connectivity between the armed forces, whether it's Canadian or European, so that's there. The growth opportunity, while the overall pie may be, relatively flat, is able to grow your market share. And in, fiscal year 25, we grew up by 4%. And, the growth of this segment, is hard, but does benefit investment and experience. Those patients in Canada receive their medicinal cannabis directly from the manufacturer. So we not only onboard patients and work with them, but also then, have concierge services, and we're actually the shipper of those products directly to those patients. And so it is the totality of the strength of that system that allows us to continue to grow that business and take it. But again, it is a critical component, the learnings, and whether it's the formulary, whether it's the service, whether it's, what you communicate, there is a direct application of what you do in Canada into Germany, Poland, UK, and New Zealand. And we think that gives us a big competitive advantage.
Just staying on domestic Canadian medical, I mean, what explains your market share stickiness, right? We see a lot of volatility in the rec markets, but you've held up, obviously, your share there. And just remind us what, if you can discuss any changes you've made to that business over the last couple of years, domestic medical.
Yeah, well, I appreciate, the comment on the growth. We've grown not only our overall business from a revenue standpoint, we've also grown our share of that business. It is a expensive and difficult business to service, and these are patients that require, a lot of support all throughout, the onboarding, the patient journey, and the delivery of those products. We've continued to invest in that system and brought in some world-class talent in order to support that system. And we think it not only is very sticky, but we think we have an advantage for our patients, which will allow us to continue to grow that business over time.
Right. Look, and we're going to move on to the countries now, but just one question as a reminder. I'm not saying that the Canadian standard is going to be used necessarily in other overseas markets, but how does telehealth work in the Canadian medical market? Or I mean, first of all, is it allowed? And if so, with what types of restrictions?
It's not as much of a driver. Most of the patients are coming into the funnel, so to speak, through direct contact, with a practicing, prescribing physician or an NP or through a clinic. And so you don't see like you would in Germany that the vast majority of the new patients are coming in through telehealth. So it's not as, because of the way legalization happened in Canada and because of the very mainstream aspect of Canadian medical cannabis, you don't have these specialized onboarding opportunities, say with telehealth, like you would see in, say, Germany or even in Poland.
Right. Okay. Thank you for that. So look, we want to move on now to specific countries. We'll start with Germany. I don't think I need to remind people that, it's been a great growth market, right? Exports from Canada up significantly. So a lot to celebrate. But at the moment, the focus in Germany, it's on potential changes that the government wants to implement, right? Before we talk about how things may play out, maybe for the audience, please rehash the key changes that are being proposed by the Minister of Health and that were approved by the cabinet recently.
Well, obviously we had a new government and the new Minister of Health wanted to explore some different aspects of medical cannabis. I think what you're specifically talking about is around telehealth and potential restrictions or modifications to the onboarding of it. There were different aspects of it, but I think the most relevant for the audience and the one that has the most potential practical application would be telehealth. Now, just as an aside, we saw a change in Poland. I know we'll probably talk about Poland soon. That gives us a lot of insight. But let me go through it and sort of our position on it. And so, as expected, the Germany's coalition cabinet allowed the health minister's proposal on limiting telehealth to move forward. But it's coalition government, and the key coalition representatives, including key members of the previous government, have already announced their opposition to the plan. So, as this discussion has now moved to the floor of Parliament, we expect to hear the patient's voice much more clearly, which is a critical stakeholder in this initiative. We have heard the regulators speak about it, but we know medical cannabis makes a real difference to patients, and it's now their turn, to be engaged. So we support healthy and reasonable access to high quality medical cannabis products. There's no disagreement there. And part of what the health ministry is currently proposing is challenge to this access. And, the stakeholders will lean into that.
Right.
So what we know and what others agree with is that patients need reliable access to their medicines in Germany. And there is a component of this conversation that we don't think, is likely, but would potentially limit the shipment of medical cannabis through the mail, which is allowed in Germany like it is other scheduled medications. And so we believe, forward-looking policy regarding medical cannabis makes the most sense, but we're going to have to see what happens in the parliamentary process as this goes through. But again, it is a new industry, and we've seen similar, changes in Poland. And in Poland, there was a bit of a downturn, but it quickly bounced back. And responsible companies like Aurora will be able to navigate it.
Right. And do we know the timeline for Parliament to make a decision on this? Is there what we would call a public comment period? Any thoughts on that?
We don't know in terms of a decision. We know the Parliament most likely November and December will hear more about what that means, including comments from patients and potentially other key stakeholders. So end of the year, we'll probably receive some more information about that.
Right. And for those that are not so familiar, when I look at the US markets, right, every state is different. I see that in some states, the incumbents, the medical operators, MSOs, have had a great dialogue and relationship with the regulators, and they have been able to work together in formulating change. In other states, sometimes it's more confrontational, right? How, for those that are not so familiar, how would you describe the industry lobby in Germany, the relationship with authorities?
Well, first, unlike the US, these are federal regulators. So these are accomplished, established regulators, whether it's GMP certification or marketing or sales or any of this. So it's a different, type of individual that is very well entrenched in the pharmaceutical industries in each of the countries in which they represent. So they are professionals, they are thoughtful, and we appreciate the work. They are very interested in a science responsibility-based conversation with companies like Aurora. So there's a lot of good conversations that happen between us and the regulators, between key industry groups that we support and the regulators. And so, we're very supportive of that overall process. And it is very traditional. This is not, like, say, different markets. And so it's a science-based process. It's one where companies like Aurora, are able to navigate well, but it's a good conversation and it's evolving one. And while certain politicians may have a certain opinion on different things, the science leaders and the regulators and companies like Aurora are usually pretty much in lockstep.
Right. I know we don't want to make predictions here and we don't want to like cherry pick either, but in my opinion, if there are some form of change on the telehealth side of things, maybe that's understandable, it can be absorbed, and we would see the response, the bounce back that we saw in Poland. I'd be more concerned about the restrictions on the home delivery, right? But it seems that that's safer, if I can use that term. But anything else you want to share in that sense? And I know we're
No,
not cherry pick outcomes here, but yeah.
Yeah, I'd say it this way. I think the home delivery has a much bigger impact,
Right.
because companies like Aurora can navigate, the change to the, telehealth onboarding, just like we saw in Poland. But, access to patients, particularly those that live in rural areas, of which there is in Germany, and the traditional acceptance and the mainstream acceptance of shipping other similar pharmaceuticals through the mail, I think make that one, a little bit more different than, say, a modest change to the telehealth onboarding process.
And just moving on to the business side of Aurora in Germany, do you have a sense of your market share in the cash payer segment and versus the reimbursed segment?
Yeah, unfortunately, in Germany, like in some other countries, there is no syndicated data. There's no public market data, that I can reference, and I wouldn't want to misrepresent, where Aurora sort of lands on that. So we look at some different, sources, whether that's through our wholesalers or not. We look at the number of SKUs on the market. We can look at the larger of the telehealth providers, and we do have a lot of interactions with doctors and pharmacists to sort of, get a general sense. And so our current, belief is that we are one of the larger companies in Germany, particularly with core and premium products, and that the number of SKUs are all, sort of competitive and give us a big opportunity. And importantly, we have a very good reputation with those key stakeholders. So as this category continues to evolve, I think it gives us a strong foundation to build upon.
Right. Look, just one last question in Germany. Obviously, we all recognize the moat that companies like yourself have in the German market and how you've achieved that over the years. But something that, when we look at the numbers, imports in Germany went from 8 tons in the first quarter of 24 to 43, more than 43 in the second quarter of 25, right? And we haven't seen that type of growth necessarily by the largest operators like, say, Aurora, right? And I know that you disclose the total numbers, so it's not by country, right? But so first of all, I know I'm looking at apples and oranges here, but when I see the growth in imports and I don't see the same type of growth from some of the larger LPs, I wonder, how strong was that moat in Germany really for a company like yourselves compared to some of the other importers there? I could mention a few, but any thoughts on that in terms of this apparent disconnect between the import data and the growth in your export business?
Yeah, I mean, I think, Germany, like all new markets, will be very dynamic. It's our belief that whether it's the current situation or going forward, that you will have a core group of companies like Aurora that will have a disproportionate market share. And there are a lot of people importing value flower into Germany that will have, a decent market share, but then will sort of fall off. A lot of the products that you're referencing and a lot of the tonnage that you're describing is in the, discount or value, flower segment. It's not a segment we play in. So, first, I would not, purport to be an expert in the value flower market. But secondly, we see a lot more stability in that core and premium market. And again, it's medicine prescribed by a doctor. They like consistency, they like quality. And while there's always going to be a place for, inexpensive value flower, we see a lot more, consistency in the spaces that we play in.
Right. Okay. Thank you for that color. So just moving on to Poland, your understanding of how the restrictions on telehealth are playing out. I mean, I hear initially there was a total ban on telehealth. Now I hear some people talking about a hybrid model. What can you share in that regard?
Yeah, I mean, I think following those changes in the regulations, we've seen patients shift their prescriptions, from the old telehealth platform model into clinics. And it is true that telehealth policy change disrupted the distributions of our products in the short term. But since then, we've seen significant, physician involvement. We have quite a few people on the ground in Poland, medical, education professionals that continue to educate, and there's an understanding in that market. It's a market that does, have value around high quality and premium products. And so while there were some temporary headwinds for us, for the most part, we've seen, those challenges behind us. Now, you mentioned the term moat as we were talking about in Germany. Poland has a significant moat, and that's a very lengthy registration process.
Right.
You see a lot more market share concentration in Poland than you do in almost in any other market, where four companies, probably control the vast majority of the overall business. And in some cases, that registration process can take up to 18 months. And so, that all sort of builds, to the longer you're in that market, the more time you have it, you really get to see, sort of an outsized share performance. We launched two of the highest potency cultivars into that market. There's been a great reaction to it. So it is a market that values quality. And we also have a great relationship with the regulators in that market. And so we expect to have a consistent pipeline of new products in that market, that will do well for us.
Right. So look, I know that we didn't discuss in detail RTM in the case of Germany, but obviously that's one of the strengths of Aurora, right? But
Yeah.
can you just differentiate a little bit between Poland and Germany? I understand in the case of Poland, you have to go through a distributor. It's
Correct.
not your own brand that you end up selling, but you still do have people on the ground helping on the
Yep.
sales effort, right? So just more color that you can share in terms of RTM, Poland versus Germany for Aurora.
Yeah, so Germany's a bit of a hybrid. It's a bit of both, depending on what works for us. Specifically with Poland, you're right. The regulations do require that we work through a distributor, and we have great partners in Poland, pharmaceutical background, compliant, regulatory alignment, and so we work with them. We do all the registrations, the dossiers of those new products. It is our portfolio, so we're choosing which items. And then we are partnering not only with the purchaser of that product, which you describe as a wholesaler, but then also the pharmacist. But in order, to drive that business, you need patient demand and you need alignment with prescribing physicians. So we do have a very effective sales organization and education organization in Poland interacting, with those key stakeholders, which has driven for us a very successful and sustainable business in Poland.
Right. And are those distributors exclusive? And then maybe remind people of, the point of sale in Poland, how many pharmacies are we talking about? I think the number of SKUs is very limited. What can you share in that regard?
Yeah, so I mentioned we had multiple. So, exclusive would obviously denote one. So we don't have exclusivity in
Right.
terms of our partnership. It is a, finite group of wholesalers that we have a long history with and we like. The pharmacy count's a bit tough to get because it's not reported, but it's substantive, obviously, focused on the larger, population centers, whether it be Warsaw or others. But it is a very effective distribution network, again, built on a pharmaceutical foundation. So, this is not a one-off in terms of distribution of cannabis. Like in other markets, whether it's in Germany or others, we are partnering with, very effective, very established pharmaceutical delivery companies that know how to do this.
Right. So before we move on, just your long-term outlook for Poland and even and also Germany, we simplistically sometimes look at the population penetration of the medical programs in the US, which of course are very different to Europe. We look at Pennsylvania, Florida, you almost 4% of the population on the programs. In the case of Poland, the last time I checked, I think it was about 1%, Germany 0.5. How do you think about the long-term outlook for the medical markets in those two countries?
Well, very bullish. I mean, Germany, is a huge market. As you mentioned, the percentage of people in the medical cannabis, right now is small, but it's growing rapidly, as you mentioned, by the imports of the tonnage. It is very becoming more and more mainstream, whether it's in the reimbursed side or whether it's on the self-payer side. And you're seeing acceptance, of medical cannabis very broadly in a big market. Germany is also critically important because given its role in the EU and in Europe in general, a lot of countries look to Germany, and so it opens up other markets. Equally as bullish on Poland. It's a regulatory environment that benefits companies like Aurora. We've continued to see growth even with a bit of this, change in telemedicine. And then again, it has influence on its neighbors. We've started to hear some rumblings out of the Ukraine, which obviously with this terrible situation and what's going on, but that is a large country with a large population. And so what we see in Europe is as medical cannabis continues to be successful, which it has been in these markets, you see more and more countries adopting it and having similar, regulatory sort of provisions. So the ability for Aurora to leverage those learnings and quickly get into those markets, is an advantage.
Right. So we want to move on the discussion here now to the UK, right? It's a market that maybe a year ago we didn't talk much about. It's one of the fastest growing export markets for Canada. We went from about, zero point 0.1 tons in 1Q24 to about 3 tons from Canada to the UK. And then, of course, in some Portugal to the UK, it's another 2 to 3 tons. So it's a fast growing market. What can you share with us about how Aurora is performing there and your moat in that market?
Yeah, as you mentioned, UK is an exciting market and is one that has come on pretty quick. We've seen, good growth over the last couple of years and expanding. And you mentioned distribution earlier through new partnerships, which we find to be very effective. But most importantly, I think for the UK, it's a market where you can be, successful because you can sell other formats other than flower. And so we had, launch of some very high quality, what we would call inhalable cannabis extracts, or the audience may know as vapes, that have done very well on top of the dried flower and the cannabis oil that we have there. We think there's a lot of opportunity for higher patient penetration. You mentioned some of that before. And given the connectivity, of the UK to say key markets like Germany and Poland and others, we think there's a lot of upside there in introducing new products and demonstrating that quality. So we're excited about the UK.
Right. And I know it's early days in the UK. I'm not going to ask you to, preempt your strategy there, but I see, I'm not going to say I fear, but I see that it's becoming quite vertically integrated, a bit like Australia, right? So I think they get Curaleaf, their own online pharmacy, their clinic, and then obviously importing their own product plus third parties that they're using. How are you building? What opportunities do you see to forward integrate a bit more in the UK? Or maybe the way things are, it's already good enough for Aurora?
No, I think, again, Aurora's place in the world, is to develop premium, high quality, always available, medical cannabis. That's not the focus of others. So as you mentioned, some of these imports, a majority of what we're seeing is maybe in a different pricing tier or doesn't have the same sort of medicinal focus. And so the UK obviously is an advanced country with an interest in that. You have a really strong, subset of prescribing physicians. And so while, it may not be the hardest market to get into, in that premium and super premium segments that we operate in, there's not as much competition. And so, whether it's clinics, whether it's prescribing physicians, or most importantly, patients, there's clearly a place in the UK for products that Aurora makes. And so it allows us, to navigate it, and it allows us to operate, in some segments that just have a different competitive set.
Right. And again, and correct me if I'm wrong, but so if you don't have a clinic or an online pharmacy in the UK, would it make sense to own that down the road?
Yeah, I mean, you can look at it. I think, given the interest in our products, we've developed some very strong partnerships with clinics. I mean, those clinics and pharmacies that you're mentioning are not exclusive, to one company. Patients have the ability to choose their medicine through a consultation with their prescribing physician. And, we see physicians and patients interested in our products. So therefore, clinics are interested in our products. And, we found that to be effective. But we're always looking at, different variants of it. But when there's, patient demand of your products, you have a lot of options.
Right. And just a reminder for the audience, in the case of Canada, Aurora does not own its own clinics, or do you?
We partner, with third parties on that, and we're connected to them. But, just like I mentioned in the UK, the clinics that you see in Canada, whether ours or someone else's, are not exclusive.
Right.
And so patients have the ability to navigate, different products. And the main obligation for Aurora or someone else would be to create, patient demand and acceptance by prescribing physicians. And as long as you have that, there's a variety of different ways you can get those medicinal cannabis products to patients.
Okay. Now we're going to move on to other countries, but just, quick questions, quick answers. If you can talk briefly about France and Spain, what's next there? There's been some regulatory changes. Please update us. And how is Aurora positioned in those two markets?
Sure, I'd be happy to. Let's start with France. We've been a partner of the French government from the beginning of their tender. We know it's been going on quite a long period of time. The current thinking is that the regulatory regime will advantage oils, but it's not final yet. So we look forward to supporting French patients at a time in which there's more clarity. What we're hearing is Q2 of 2026 that the French government will be prepared to launch a permanent regulatory framework for medicinal cannabis products. There's been a little bit of a delay in that, but we're looking forward to it. Like I said, we've been there since the beginning with them, and at a time in which that's established, we'll look at it.
Right. In the case of Spain?
Spain, very early days, but good step in the right direction. Right now, the medical cannabis applications are very restricted, but opening up that market, I think, is important. In developed countries, while there may be some zigs and zags, we usually only see legislation go in one direction. And so we expect to see that in a country like Spain, where there'll be more welcoming approaches, to medical cannabis before long. With Spain and, potentially France on side soon, we're seeing more than half of the EU member countries integrating medical cannabis into their healthcare approaches, including reimbursement. And so, again, this momentum that we're seeing in Europe, really is promising.
Before we move on to Australia, any other markets you might want to touch on that people should be paying attention to?
Yeah, I mean, I think, there's smaller ones that are more early days, whether it's a country like Switzerland or even Sweden, but with Spain opening the door and France soon to follow, and having that many parts of the EU, we think we're just at the beginning of the wave, of medical cannabis policy integration. We are seeing consistency, a science-based focus, and an advantage given to those companies that do it the right way, whether it's in GMP certification or not. We're also starting to see a standardization of supply and a real understanding from prescribing physicians and patients, around quality, medicinal quality, and going forward. So we're focused on the rest of the EU countries. We're engaged with those regulators. Again, as you mentioned, having a EU-GMP production facility, in the center of Europe in Leuna, Germany, is a big advantage. We've had a lot of visits to that, and so we're, excited about where that's going.
Thank you. So just moving on to Australia, I believe in the last quarter you reported June, Australia and New Zealand about $12 million in sales, Europe about 25, but sizable business in Oceania, of course. Remind us of the rationale of having bought 100% of MedReleaf, and what changes have you implemented there in that business since you acquired it?
Yeah, so after Canada, Australia is our next largest single market for medical cannabis. The Pennington Institute has estimated the market size of that market to be $1 billion. And so while, there's not perfect precision, it is a very large market. It's highly regulated. It is growing rapidly. And very important, as we mentioned with the UK, it allows for one of the widest ranges of product formats outside of North America. And so it allows us to leverage our complete portfolio of products developed over a decade in Canada. And so for that reason, exciting market for us. We started with MedReleaf back in 2017, owning a small percentage of it and working with that team. And they've been a big part of the growth of Australia, conservative pharmaceutical grade cultivation, global approach from that market. And so the transaction, that you're referencing to acquire the remaining 90% really allowed us to have a meaningful platform, to leverage everything we're doing internationally into that key market. And it's not just Australia, it's also New Zealand. While smaller, a market with a long history of cannabis and a long history of medical cannabis. And so the combination of the two and acquiring the other 90%, we thought was an additive acquisition.
Right. And Australia, to me, it's quite a vertically integrated market downstream. Just remind us on the RTM side, do you control your own distribution to pharmacies? Do you rely on distributors? How does it work?
So we work with partners in terms of distribution and market. Importantly, the medical cannabis market in Australia, is characterized by a clinician-led traditional pharma-like product distribution model. So these are pharma distributors, know what they're doing and working in other aspects. And you really have, a doctor-driven market. So there's regulations through the regulatory agency of APRA. You also have what's called the TGA, which regulates us as a manufacturer and our partners. And while it's a complex market, we see that because you can leverage all these different formats, it really is an exciting market. We ship directly from Canada into that market. And so we control all aspects of that and then right to our distribution partners who then provide it to pharmacists who then provide it to patients.
Right. Will it make sense for you to own the production in Australia at some point down the road?
Right now, cultivation in Australia is not as compelling as it would be in Canada. And given, the navigation of us being able to ship directly, from Canada, control it in the same facilities, because the TGA GMP, carries that GMP certification, it also creates, value there. I mean, never say never, but right now, we feel comfortable with shipping the products from Canada.
Yeah. Two last questions on Australia. One, based on the data, and it's somewhat limited, it seems that the market growth in dollar terms has pretty much stalled due to pricing. Is that true? Is that your read? And then number two, and maybe more importantly, the TGA is undergoing a consultation period. That's something the industry are concerned about. What can you share in that regard, and what do you expect how do you expect it to work out?
Yeah, let me start with the TGA and then I'll talk about the market. So we work, pretty closely with the TGA, and we don't really expect any, significant changes in the short term or medium term that could impact patient access. And as we talked about in other markets, that's a key component. The TGA consultation that you mentioned has just finished, collecting public information, and we contributed significantly to that dialogue, especially in cooperation with Australia's Medical Cannabis Industry Association. We think the Industry Association has an important voice. Governments can take a few months to collate and tabulate that, and we will probably see something back in the spring as to what may happen next. I don't have any, expectation on preconceived outcomes, and it is, common in these early days to see sort of some changes. That being said, Australia is unique. It relies on trade for so many of its products, including most of its pharmaceutical products. 70% of all pharmaceutical products come from offshore. And so it is a regulatory regime that has a history with it, understands it, and can regulate it. And so you have that. Also, patient and physicians, because of the way it's evolved, have really come to rely, on our products and some others, in that industry. And so that patient voice, is a big part of it. And again, with our focus on premium and core products, some of those imports and some of what you're talking about plays in, in areas that for our long-term focus aren't, as sort of relevant. And so I think it's going to be a challenge for this to change dramatically as ever if it's responsible or science-based. We think that advantages a company like Aurora. And, we've not seen a situation with the TGA where they haven't been listening to the industry and what that means to the overall patient experience. So more to follow, but we're encouraged by the dialogue.
Thank you. And then just going back to the question in terms of your outlook for the market, I know it's uncertain right now because of the consultation period, but in terms of what's happening with the market in terms of growth, in your opinion, there's data, but not perfect data.
Yeah, I mean, the data that you're referencing, is imperfect. It's a subset of pharmacies, and it references in a lot of ways pricing. And so when you see the overall revenue drop in potential, aspects of it, it doesn't tell the broader picture, of the other segments. And again, we're seeing an expansion in pastilles, which is an oral format. There's an opportunity in other formats there in a medicinal way. And so we're bullish on Australia. And, I think when you look at the global system we have, we had a situation, as we talked about in Poland, where we had to navigate, some regulatory headwinds, but at the same time, Germany, did exceedingly well for us. We're now seeing a situation, potential change in Australia, but we have other markets. So the point is, the bigger the broader of your system, the more inputs that you can lever, because we sell the same medicinal products in Australia that we sell in Europe. I think again gives, Aurora a unique advantage. If you're just exporting into Australia, it would probably hurt more than, say, a company like Aurora that has the flexibility, to leverage a broader system. But, at the end of the day, all of these regulations go back, to common sense, science, and different aspects. And because of that, we think Aurora is well positioned to navigate that.
And I think something people miss in the case of Australia is that you have all these what I call specialty dispensaries, right? Not pharmacies that sell all types of products. And these specialty dispensaries are accounting now for the majority of the market based on my math. Maybe 5 years ago, the specialty dispensaries were 20% of the market. I calculate now they could be about as much as 2/3. I'm not asking you to confirm my numbers, but it seems that that's where the growth has been coming from, which is a good thing for the market outlook, of course.
Yeah. I mean, I don't, like I said, I don't have a reference point on your numbers. I mean, we do see an evolution there, whether it's, specialty pharmacies or clinics. Again, though, regardless of the delivery method, it's a prescribing physician talking to a patient, making a selection for a specific item. And again, it's medicine. And so if you can manage it that way and create patient demand and acceptance by prescribing physicians and do it responsibly with the regulators, while there may be a little bit of ups and downs long term, like with all, medicinal products, you're going to win. And that's where we think we are.
Yeah. Thank you. Look, just moving on to a last set of questions. How is Aurora positioned if the US were to reschedule or legalize medical cannabis? Or even if you don't have any assets there right now, how quickly could you react and build a business there in the US?
Yeah, we've been consistent in our position, on the U.S. for a long period of time. I have the benefit of, spending 20 years of my career working, with the FDA, DEA, ATF, and other sort of related, regulatory agencies around it. It is our belief that, for the U.S. to legalize, it will be medical first, and that it will be a federally legal U.S. market. Secondarily, it is our belief that the FDA will regulate medical cannabis. And so when you look at those two aspects of it, you look at their neighbor to the north, and having a decade of experience in being the largest Canadian medical, company and operating in strong regulatory regimes in a science-based way, we think we have an advantage. So the fact that we don't have infrastructure in the US right now, at a time in which federal legalization, at a time in which FDA regulation, Aurora is almost uniquely positioned to be able to navigate that, because it's not a federal construct today.
Right.
And that's no disrespect to the MSOs who do a great job in the US. It's just it's a different environment. And so, you've got that to deal with. You've got the 280E tax situation, which is obviously, an enormous challenge. And then you've got to deal with sort of interstate aspects of it. And so I would say, we think Aurora has a significant advantage if and when the US has federal legalization. And right now, everything that we're learning and doing, in Canada as a market leader, in Poland, UK, Australia, and Germany, all would be applicable to a federal legalization platform in the US.
Right. And in that sense, your balance sheet, right, puts you in places you very well in terms of reacting quickly on the M&A front, I suppose.
We have no, as we talked about at the beginning, Aurora's, financial performance has been exceptional. And you talk about the balance sheet, there's over $180 million on it, and there's no debt on our cannabis business. And so, that opportunistic and that sort of resource enabled to leverage it. And again, as I mentioned earlier, we continue to invest, in world-class GMP pharmaceutical grade facilities. All would be of interest. I mean, the same type of auditors that audit our facilities would be similar to what the FDA would do or other regulators would do in the US. So we have the experience, we have, the ability to navigate very tough markets. And so I think, if and when the US were to go, we're well positioned.
Great. Look, I know we only have about 5 minutes. I'm going to read just two questions that came through. I'm going to paraphrase some of them because I think they're all on the same topic.
Yep.
Someone asking, understood very clear the strategies on the medical side, even call it pharmaceutical type of medical cannabis. But it seems that a lot of the development on the other overseas markets has been, I don't want to use the word pseudo rec, right? But that's been more of the rec type of consumer than necessarily the medical patient consumer. Doesn't that put you as if that's true, does your strategy make sense? And I'm paraphrasing, and maybe the person asking the question is persons are making the wrong assumptions. Any color there?
Yeah, I mean, we don't draw that distinction. And so these are, medical markets. And what we see in Canada, as an example, if you compare and contrast a medical patient versus a recreational patient, recreational consumer, and again, Canada is the only place where it's legal, those individuals want the same things. They want high quality, consistent products, whether that's flower or others. They want innovation. They want it in stock. And they want to know that the company behind it, is going to do all of those things. And so that's what we do. We don't see a disadvantage. If you look at, the products that are successful internationally, whether ours or others, they're all, in federally legal medical markets, and it's all the same attributes of what we sell in the Canadian medical system. So, it's not a, disadvantage. And unlike, say, the US, where the patient has complete flexibility in a dispensary to buy what they want. Right. I just would remind people that this is a conversation, an interaction between a prescribing physician and a patient receiving a specific item in a pharmacy. And so, whether it's marketing or different attributes that might color, say, a recreational product, the best-selling products in these international medical markets are not that.
Right. Another question in terms of M&A, what type of assets, businesses would you be looking at? Whatever you can share in that regard.
Yeah, I mean, first and foremost, as we've said, we're focused on growth and profitability. So we would want something that would be accretive, to that. Secondly, we, as we've talked this whole call, really believe that medical cannabis, is the future. So, items that would be there. But in the interim, not doing an acquisition doesn't mean you can't grow. We're making significant investments in our own business, and we think right now, we don't need to buy something in order to grow our market share or be able to grow higher quality flower or invest in our genetics. And so, all of it goes back to growth and profitability. And right now, now if something came up, as you mentioned, we have $180 million and no debt. And so we're in a great position, if we saw something we liked. But right now, our focus has been, internally, but we're all, we would always be open to something that checked those boxes.
Someone asking about ATM, but I don't think you have an ATM or you haven't been issuing it.
We haven't used the ATM in a long time. And again, we've been using our cash to invest in ourselves.
Right. And I know you touched on this at the beginning, so just a short answer. In terms of expanding the supply side of the business by outsourcing versus own production, just a quick answer again. And I know you touched on it already.
We've announced partnerships with, world-class third parties, to buy compliant flower and to put it in our system. The vast majority of the products we grow ourselves, but as we continue to grow, we continue to look at it. We've been, pleased with those partnerships. And in some cases, we are selling them our genetics. So they might be growing our genetics in their facilities. Right. And where that makes sense, we'll continue to look at it.
Right. Thank you very much, Miguel. Just any closing remarks you might want to make here? And thanks.
I want to thank you, for you and the audience, for listening. We think the Aurora story is one that's different than others. And, when you look at the overall sort of picture and why people should be interested in Aurora, I think it's the consistency of the growth, it's the strength of the balance sheet, and it is the upside internationally for a finite group of companies that can execute in a compliant manner. I think we've proven that, and I think we'll continue to prove that.
Okay, that's great. Thank you very much, Miguel. Everyone, have a good day. Thank you.